Let's go now to Loup Ventures founder Gene Munster for his take on Apple earnings. Gene, what are your thoughts?
Scott, this is an important report because this is the report that's going to propel the stock to $1 trillion plus. And I've covered this for a long time. And what I see here is a different paradigm starting to take place. It's not just about what the iPhone number is in a particular quarter. It's a broader theme. And we describe this as Apple as a service. And there are three real pieces to it. We saw each of those come through in resoundment in this quarter. Number one, stable iPhone growth for the last 8 quarters now, between 0 and 5%. A few years ago, it was up and down. Second, the services piece, now 18% of revenue, that stability at a higher number. And third, the capital return. I think this is the piece that most investors are missing. $25 billion in total with the buyback plus the interest payments. That is basically puts the company on track to be net cash neutral in 3 years. That's the piece that I'm listening intently for. If they do that, Apple can move the stock 25% higher on a buyback alone. I want to warn investors who believe that this is over. This story could double or triple in the future based on what we're seeing with this theme of Apple as a service.
Yeah, I mean, it's pretty incredible there, too, Gene. And listen, let's talk about the Apple TV. If I know it gets no attention at all, that business growing 37% when you factor in the watch and everything else, you know that ecosystem as well as anybody, and it goes to services. If you've got an Apple TV, like I do, and like I'm sure a lot of people here and our viewers and listeners do as well, what do you do with it? You buy programs. Your kids buy apps. They play video games now across the Apple TV. How big is that business going to ultimately become for Apple?
Something like the TV, the box on the side, that's probably several percent. That's not that big, but I think what the bigger opportunity here is how they can use their ownership of the operating system, whether it's around Apple TV or on the device, and to grow, whether it's original content or music subs. Look at the recent Spotify numbers. They grew their paid subs 40%. By my math, Apple's growing their paid music subs by 100%. Clearly, there's an advantage to having these different devices and owning the operating system, and you're going to find other ways for the company to monetize that. That 31% growth, keep in mind, 31% also in March 18, 18% growth in December 17. So you have the step up, and it's because of what you just described, having this ecosystem of devices and then able to pump different services through that. It's working, and I think that there's no reason for it not to continue.
You buy TV, you buy the apps, you buy the iPhone, you buy the apps. It all goes into that same thing. Gene, thank you. We're going to see you in a bit. We'll let you jump back on that call. We'll check in with Gene Munster again later. All right, let's play the game. Well, Melissa likes to play it. I think she calls it Would You Rather.
Yes, nice job, Brian.
Okay, and I want to ask, it's the double...
She plays it better than you. I mean, you're
Melissa does everything better than I do. It's the double A's in FANG, F-A-A. Apple or Amazon, Guy Adami?
Apple or Amazon? I'd still. You're going to think I'm crazy. I'd still say Amazon. I think you.
I think you're crazy, but for other reasons not related to the game.
Listen, I think if there's a, I think Amazon. I understand valuation concerns there clearly, but I think in terms of upside potential, I think Amazon is still the one.
I completely disagree. Only because look what the market's doing right now to the high multiple stocks. Guy's absolutely right. How do you blow a hole in Amazon? The market blows a hole in it. But Apple, listen to what Gene just said. So the delta, so the change on services is actually 40%. We went from 18 to 31% in a year over year. So this fast-growing business, it's now 40 billion. Apple, to me, the valuation, come on. I mean, this valuation is very cheap.
Why doesn't Apple get the respect that you think it deserves?
It's going to.
Because it's a hardware business.
Not anymore.
It's the mix is changing.
Yes.
I absolutely grant you that. But that's why, though. I mean,
would you rather, Karen?
Would I
Apple
rather?
Or Amazon?
I would rather Apple.
Rather Apple.
I mean, the high flyer, exactly what Tim's talking about. The high flyerness of Amazon on a valuation basis makes me feel like there's significantly more downside.
Obviously, time horizon really matters in that. If you just want to say between now and the end of the year, when you think about the product cycle, you have,
Do you agree with that product cycle, by the way?
Yeah, of course. I mean, when you have this rotation right now that we're seeing out of growth into value, this stock or this company has growth and it has value and it's got a catalyst. So to me, I don't see the stock raging off of this number. I'd much rather. I'm very glad that this is not up, at 205 or something like that. It could be in a couple of days, but it's getting harder and harder to move this thing up. So if you really want to play for the product cycle, we know that in early September, they're going to announce these phones. They're going to tell us what the pricing is. They're going to tell us how many different ones, and then you're going to have like a few months. Don't forget that iPhone X, that 10, was released on November 1st. They released the 8 at the end of September. So you're going to have this runway all fall.
Dan, don't you agree, though, to Tim's point that if and as Apple transitions from just this to a higher margin
but
services side, the multiple
Sully,
needs to expand as well.
We haven't mentioned this. You know, Gene talked about services on all these platforms. You have to create original content. It takes a lot of money. I mean, Netflix is spending $8 billion a year on original content. So Apple is going to have to step up its spending massively. You know, every endeavor that they've had in music has been a big failure. I mean, they're growing now, Apple Music, 100% year over year. It's taken them years. And Spotify just ran away with it for a while. Now they're catching up.
Apple's number two now.
Why should it have been important before? In other words, Apple was focused on their core product. I mean, there was no reason for them to do anything else. And now
but it could be a little too late. When you look at their original content and video, it's been a real bust. So if they're going to be reliant on all these other platforms to offer original content, so you buy their hardware, that's a tough road to hoe.
But this gives me a chance to talk about Netflix. I mean, if people really think that Netflix's content is so good, Apple can do that too. And how about Apple splitting these two companies, apart? I mean, how about hardware and software as two companies? It's going to be $1 trillion company soon. I mean, that would be a driver.
Apple's services business will now be almost twice as big as Netflix and Facebook's business combined.